What is going on, XRP Army? Welcome back to the channel. Stop looking at the red candles for 1 second and listen to me very closely. I know the sentiment is brutal right now. We are trading around 160, down significantly from the July highs, and everyone on Twitter is screaming that the bull run is over. But while retail investors are panic selling their bags to BlackRock, Ripple just dropped a piece of news that shocks the US market and changes the fundamental value of this network forever. The media is ignoring it because they are too busy talking about Bitcoin's dip, but we are going to expose it. The headline is Ripple Treasury. It sounds boring, but it is the single most dangerous weapon Ripple has ever deployed against the traditional banking system. In this deep dive, we are going to break down exactly what the new GTreasury integration means for the Fortune 500, why institutions have quietly bought $1.4 billion worth of XRP ETFs during this crash, and why selling here might be the financial mistake of a lifetime. Let's start with the bombshell news that nobody is talking about. Ripple has officially launched Ripple Treasury, powered by GTreasury. You might ask, who cares? You should. GTreasury is the software used by over 800 of the world's largest companies to manage their cash. We are talking about the CFOs of massive corporations who manage billions of dollars daily. Before today, if these CFOs wanted to use crypto, they had to open a Coinbase account, deal with complex wallets, and scare their auditors. It was a nightmare. But this new integration, it hardwires the XRP ledger directly into their existing dashboard. A treasurer can now see their cash, their money market funds, and their RLUSD, Ripple stablecoin, you all on one screen. They can move liquidity using the XRP ledger with the click of a button without ever leaving the software they have used for 20 years. This is the Trojan horse. Ripple didn't just partner with a bank, they integrated into the operating system of corporate America. We need to talk about the disconnect. This is the shock for the US market. We have never seen a divergence this wide between price and utility. The price of XRP is testing the 160 support, yet the RLUSD market cap has just hit 133 billion. The stablecoin usage is exploding. Remember, RLUSD uses XRP for gas fees and for liquidity in the decentralized exchange, DEX. The network activity is at an all-time high, but the token price is at a 4-month low. This is what we call a liquidity trap. Market makers are pushing the price down to induce panic, allowing them to accumulate the supply that will be needed when these corporate treasuries start moving billions of dollars on-chain. Furthermore, let's look at the Europe shock that just happened yesterday. While the US wakes up to the Treasury news, Ripple just secured a full EMI, electronic money institution license in Europe. This is not a registration. This is a full banking grade license that allows Ripple to issue digital money and process payments across the entire European Union without needing 27 separate licenses. This unlocks the passporting rights to the entire Eurozone economy. So we have the US corporations getting hardwired via GTreasury and the European market getting unlocked via the EMI license. The fundamental picture has never been stronger. We also have to address the ETF data. The retail crowd is selling. We can see it on chain. Wallets with less than 10,000 XRP are dumping. But look at the ETFs. Since the launch in late 2025, the US spot XRP ETFs, Bitwise, Canary, etc., have absorbed $1.4 billion in net inflows. Even in the last week, while the price dropped 10%, the ETF saw positive inflows. Let that sink in. BlackRock and Bitwise clients are buying the dip. They are buying your dip. They know that when the GTreasury integration goes live for the first batch of clients in Q2 2026, the demand shock will be undeniable. Finally, look at the psychological warfare. The market is designed to make you sell at the bottom and buy at the top. The shock here isn't that the price is down, it's that the price is down while the adoption is vertical. This is a deliberate shakeout. The weak hands are being flushed out of the market so that the diamond hands and the institutions can ride the next leg up to new all-time highs without the baggage. Now, let's pivot to the technical infrastructure that makes this GTreasury news so massive and the DXC technology connection. We touched on this briefly before, but new details have emerged. GTreasury integrates with DXC's Hogan platform. For those who don't know, Hogan is the core banking system for nearly 50% of the US deposit base. It processes over $500 trillion in deposits. By integrating Ripple Treasury into this stack, Ripple has effectively built a bridge to half of the US banking sector's liquidity. This isn't about retail speculation. This is about wholesale banking. When a regional bank needs to move $50 million to a partner bank in London, they usually use Swift and wait 2 days. Now with this integration, they can use RLUSD and XRP to settle in 3 seconds. The shock to the market is going to be the sheer volume that comes from this. We aren't talking about millions anymore. We are talking about billions in daily volume. Let's discuss the RLUSD multiplier effect. The Ripple stablecoin is now trading with a market cap over 1.3 B. Critics said it was too late to the party. They were wrong. RLUSD is growing faster than USDC did in its first year. Why? Because it is compliance first. The GTreasury news proves that Ripple built RLUSD specifically for these corporate clients who cannot use offshore stablecoins like Tether. But here is the alpha for XRP holders. As RLUSD grows, the demand for XRP grows. XRP is the bridge asset that allows RLUSD to be swapped into other currencies, like euros or yen in the automated market maker AMM pools. The more RLUSD exists, the more XRP is locked up in liquidity pools to facilitate trading. It is a supply sink. We also need to talk about Standard Chartered's 8.00 thesis. Despite the current crash to 160, Standard Chartered has reiterated their 8.0 target for 2026. Why? Because their model is based on velocity of money, not technical analysis triangles. They understand that once these corporate treasury flows start hitting the ledger, the velocity increases. To support high-value transactions without slipping the price, the token price must increase. A 160 token cannot support a $1 trillion derivatives market. It's simple math. The price has to re-rate to accommodate the utility. Furthermore, let's look at the exit of the hyperunit whale. There was a massive whale liquidation event on Ethereum recently that dragged the whole market down. This was a systemic event, not an XRP specific event. XRP got dragged down by the broader market beta. This is important context. The price drop wasn't because Ripple failed. It was because a massive leverage flush happened in the broader crypto market. XRP fundamentals are pristine. The drop is guilt by association. This is usually the best time to buy, when a good asset goes on sale because of someone else's problem. Let's address the SEC lawsuit finality. We need to remind ourselves, the war is over. The case concluded in August 2025. Ripple paid the fine. XRP is not a security. This legal clarity is the only reason GTreasury and DXC are willing to work with Ripple. You don't see them integrating Solana or Cardano. Why? Because those chains still have regulatory clouds. Ripple is the only adult in the room. This safety is what corporate America craves. They don't want decentralized anarchy. They want regulated efficiency. Ripple is selling them exactly that. Finally, we have to touch on the developer ecosystem. While price is down, the number of projects launching on the XRPL EVM sidechain is up. We are seeing real-world asset, RWA, platforms tokenizing real estate and treasury bills on the ledger. These platforms need the stability of RLUSD and the speed of XRP. The ecosystem is vibrant. The builders are building. The only people panicking are the ones who stare at the 1-hour chart all day. So Ripple XRP shocks the US market. The shock is the infrastructure. But what is next for the price? We are currently testing the critical support band between 150 and 160. This is the line in the sand. If we hold this, we form a massive double bottom structure on the weekly chart. The last time we formed a structure like this was right before the 2017 run. The target for the recovery is the previous breakdown level of 230. Once we reclaim 230, the path to the all-time high of 3.65 is wide open. What is your strategy? The institutional playbook is clear. Accumulate in the panic. The smart money is buying the ETFs right now. They are dollar cost averaging DCA into this dip. My strategy is aligned with them. I am not selling a single XRP at $1.60. In fact, I am adding to my position. I am looking at the GTreasury news and realizing that the demand for this asset in 2027 and 2028 will be orders of magnitude higher than it is today. I am trading the time frame of years, not days. A critical warning on market sentiment. You will see FUD articles saying XRP is dead or Ripple is dumping on you. Look at the dates. These articles always come out at the bottom. They are designed to steal your bags. Do not let them. Do your own research. Read the GTreasury press release yourself. Read the EMI license details yourself. Verify the facts. The facts say the network is expanding. The price is lying. Let's talk about the wealth transfer. We are currently in the middle of the largest transfer of wealth in crypto history. The impatient retail investors who bought the top are selling to the patient institutional investors at the bottom. This happens every cycle. Do not be the person who pays for the institution's yacht. Be the person who rides with them. The bottom line is this: the news of Ripple Treasury and the GTreasury integration is the biggest fundamental development since the inception of the ledger. It bridges the gap between the $100 trillion corporate cash market and the XRP ledger. The price hasn't reacted yet because the market is inefficient and fearful. That inefficiency is your opportunity. The shock has dropped. Now we wait for the aftershock, the price explosion. Thank you so much for watching this urgent update. If this video helped you see through the noise and understand the massive news, please destroy that like button. It helps us wake up the community. Subscribe and turn on the notification bell so you don't miss the next update when we start the recovery. Stay strong, stay safe, and I will see you on the moon. Peace.